Welcome back, traders. I'm thrilled to have you join me for another edition of our X-Trend Speed Live. Happy Friday to everyone. Today is the last trading day of the week, and it promises to be an exciting session. Well, before we kickstart the session, let's confirm that we're all on the same page. So if you can see my screen and you can hear my voice clearly, please type in hi in the comment section so that we can get a confirmation that we are good to go this morning. So I would like to see some feedback, please. I would like to see some confirmations that the presentation, the stream is very good for us to go. So let's see if we have comments. Okay. Aki88, good morning. Riyad, good morning. Bedanadir, okay. Hey Carrie, good morning to you. Happy Friday. One Moff G, good morning to you too. Glad to have you guys around. So let's take this as a positive confirmation that we are good to go this morning. And it's on this note I welcome you once again to yet another promising session. My name is Sheriff Daramola, and for the next 1 hour I'm going to be taking you on a journey where we shall be evaluating the financial market using simple parameters such as trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movement of the assets on our watch list. So we have 4 financial assets that we have been monitoring since the beginning of this week, and these are the GBPUSD, XAUUSD, USTech100, and of course the USOILSPOT. And in fact, in the last 1 week, we have had quite an interesting position and of course profitable ones, especially in the last 24 hours. So we are going to be deliberating into that in a moment. For those who are joining us for the first time, you are highly welcome on board. And what we simply do here is to come together on a daily basis in anticipation of the New York session, where we of course review our existing position while we also manage them as well, and also aim to position ourselves strategically for the day's trading session. And this happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And one interesting thing about it is that the more time you spend with us, the better you become in digesting the information you have gathered here, which you can eventually use in making your independent trading decision on your own account. So once again, you are highly welcome. So with that being said, here we shall be diving right into the economic calendar to see what events we are going to be looking out for today. And of course, you know, these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and of course specific technical patterns. And this also helps us to be able to position ourselves in such a way that we can catch any potential trading opportunity ahead, during, and even after the event. And remember, the last 24 hours was quite interesting. Remember, we had a couple of high impact events coming from the US and the Japanese economic dockets yesterday, which significantly affected price movement across the board. And for the US dollar, we saw a promising data coming in. That is the GDP data, which came in at 2.4%, a little bit over the expectations, leading into a surge in the US dollar, and of course giving us a positive variance of 1.15. So it was quite a very insightful moment, as it gives us an idea into how well the US economy is expanding. And of course, this kind of scenario, the way it affected the market is this. Now, remember that on Wednesday, the Fed chairman made mention of the possibility of halting interest rates. I would like to use his word here. So he said here that we expect weaker economic and inflation data in the coming month, and therefore see the peak in key rates as having been reached. So he's expecting that with the last rate hike, that we are likely going to be seeing weaker economic releases, weaker economic data, which of course is going to be in line with the idea of stalling the inflation. But from what we got here yesterday, a very strong GDP data, which is something, a sign that there is going to be more rate hikes. And of course, investors are now placing their money on the US dollar with the hopes that there will be higher yields and the hopes that there will be more interest rate hike. And as a result of this, we saw a huge traction in the US dollar. So we are going to be looking at how we are going to be managing our positions on that one. Then we also had the consumer price index yesterday from the Japanese economy, which also came in very, very positive, with a positive deviation of 0.56. And this also had some major impact on the USD JPY that we were monitoring. Then for today, July 28th, we have two high impact events coming in from the US economic docket. The first one here is the core personal consumption expenditure for the month on month, and then the other one is for the year on year. This is a very significant indicator of inflation, and of course, this data is released by the US Bureau of Economic Analysis, and the index is an average amount of money that consumers spend in a month. So we want to know how well people spent in the US economy, as this will give us an insight into the buoyancy of the economy. Another major event coming in about an hour 30 minutes from now, which everyone in the market will be looking forward to. So with that being said here, let's dive right into the charts and let's look at things from a technical standpoint. So the first financial instrument we are going to be taking on this morning, as usual, is going to be the USOILSPOT. And in fact, since the beginning of this week, we have enjoyed a phenomenal move in price action. As remember, we have been buying this asset since the beginning of this week. Now, before we go into the details of what our expectation is going to be looking like for today, I want us to run through what really happened at the beginning of the week and what incited the idea of buying this commodity. Now, at the beginning of the week, from a technical standpoint, we observed a bearish gap initially, giving us an insight into the institutional sentiment during the course of the weekend. And followed with this was this range where price action was confined, and that was between the $77 level and of course the $76.50 level. And with this kind of flat channel, it gave us a platform that we can easily use to identify potential trading opportunity. And you know how we do it in this community. When price action falls into this kind of flat channel, we want to remain patient, waiting for new structures to mature and signal in the form of a breakout or breakdown of that range for a trading opportunities. Now, I told us all that day that I already had a buy position prior to our live session. I think I had two positions running prior to the live session on Monday, and I told us all that a retest should give us confirmation to add more position, which actually happened. And since that moment, we have been buying the USOILSPOT, added more positions at the breakouts of key levels that we identified, such as the $78.50 level, $79 level, and of course we also had one at the $79.70 area, which also was triggered yesterday before the bearish momentum came in to take us out on all the buy positions we had. yesterday. So it has been quite an interesting and profitable week for everyone in this community. Now, for those who still have a buy position, because there are still going to be some of us who will still have buy positions running. If you do, well, I will be suggesting you definitely want to be moving all stop losses to anywhere around that $79.40 level. Secure your positions, as there could be chances that price action could drop to the downside. And one more thing I didn't explain earlier while talking on the economic calendar is the fact that today is the last trading day of the week, and there is always a psychological expectation when it comes to such days like last days of the week, last days of the month, and last days of the year or last day of the quarter. There's always this tendency to start cutting, closing some of the positions. So majority of the key players who already have a huge position running throughout the course of the week or the month will want to definitely be closing in some of their positions ahead of the weekend, which of course would reflect on the chart as price action gradually moving in the opposite direction of the prior leading price action, giving us scenarios that look like reversal patterns or such. So while we try to review the current market structure today, we're also going to be taking all these parameters and expectations into consideration too as well. And talking about the US oil market right now, we might likely be seeing some sell-off. That is majority who are taking advantage of the oil prices at a very cheap level, at least for this week, which was around the $77 area, might want to be closing in their profit ahead of the weekend, because you might not know what will happen on Monday. So we might likely see some sell-off in this market. So in that regard, let's ensure that we secure any buy positions that we have at this point in time. Now, with that being said here, what is going to be our plans as we get prepared for the New York session today? Well, while I was trying to dissect the current market structure to decipher what market participants are thinking or where price might likely go for today, I was able to identify another ascending trend line. Remember, we had a major ascending trend line which was guiding our bullish momentum since the beginning of the week. Let me share that with you in a moment. So if I align that correctly, this is the ascending trend line that has been supporting our bullish momentum so far this week. But one thing we've noticed in the last 24 hours is that price action has broken down that ascending trend line, giving us clue that buyers, the bullish steam is gradually reducing, but we can't jump into conclusion that that is what is happening, as we'll still need some further confirmation that truly sellers are gaining momentum. So while trying to dissect the current market structure, I had a new ascending trend line after taking into consideration the nature of price action since Wednesday, that is the midweek. And one thing we saw here after connecting the series of higher lows is this ascending trend line, which I have highlighted in blue color. So for today's trading session, we are definitely going to be using this trend line as a yardstick to guide our trading activity. Now, what this simply means is that as long as price action remains above that ascending trend line, we shall look out for structures and patterns that support the idea of buying. Now, with the situation we have right now, it appears that we're beginning to see some selling pressure resume in this market. Now, if you look at when price action are tested and even broke out of that $80 mark a little bit during the New York session yesterday, we saw this huge engulfing bearish candle slicing back to the downside to give us a sign that there is some level of doubt and fear at that new high. And this is peculiar whenever price action finds a new high, as majority, out of the fear that this is a new territory, will want to be closing in their positions and opening sometimes again, and this will lead into the scenario that looks choppy or consolidating in nature, giving us a clue that there is an indecision of fear at that point in time, which of course is evident in this particular market. Now, since price action tested that high here, we saw that since that moment yesterday, price is unable to even get close to that level, not let alone break out of that structure, hereby giving us a lower high to work with for today. Now, with the lower high on this current market structure, we cannot ignore the potentials that sellers might likely come in at any point in time. So with a lower high, you know how we do it. Whenever we cite such structures, we want to be anticipating a bearish move. That is, sellers are gradually gaining momentum behind the scenes. Then secondly, we of course want to be connecting the series of lower highs here to use as a yardstick to guide our trading activity for today. So I would like to thicken this a little bit and give it a different color. So let's give it a wine color, and then do some little adjustment to capture the pivot highs there. So we now have a trend line, which of course we'll be using to guide our trading activity for today. Now, what this simply means is that as long as price action remains below this descending trend line, we have no other choice than to continue to look out for structures and patterns that will support the idea of selling. Though price action still remains around that ascending trend line, we still opens up the idea of a potential move to the upside. But while we keep that in mind, we're also going to consider selling too if price remains below that descending trend line. So now with the situation we have right here, price trading below the descending trend line, of course we want to be looking out for selling opportunity. And if you are taking advantage of the breakdown of the $79.70 level, well, it's okay. There is no problem about that. Just ensure that you have a wider stop loss, as we might likely see some shake-off before price action really moves in that direction. So you want to be having your stop losses anywhere above the $80 mark, which could dovetail to about 30 to 35 pips stop loss on this single one. But for those who are not yet in this trade, well, I want to see something like selling pressure continue below the $79.70 level to feel comfortable in that sell position. So I want to see something like price coming back to retest the $79.70 level, and of course the descending trend line where continued selling pressure on my lower time frame will give me that opportunity to sell. And if price action continues to break down the $79.40 area, then we want to be adding more position to our existing trade. Now, this position here could continue if price action goes on to break down another level at the $79 area, where we can also take advantage of more opportunities at the breakdown retest of that structure. So that is how we are going to be considering selling the US All Spot for today. So let's mark these levels out on our chart and use it as a reference point to guide our trading activity. Now, in as much as we're looking out for selling opportunity, and the reason why we are looking out for selling opportunity here are based on two things. First of all, we can see we have lower highs, and since price action tested the $80 mark yesterday, we are yet to get that momentum that will bring price back into that area. Now, that is one scenario. Then secondly, we have a descending trend line that we want to be using to guide our trading activity. Then thirdly, a breakdown of the ascending trend line, which I highlighted in blue color, will definitely be a signal that there will be a momentum shift anytime soon. Now, in as much as we talked about the bearish move, we cannot ignore the potentials of buyers. It has been a very strong bullish momentum since the beginning of the week, hence we cannot ignore that buyers could still come in anytime. Now, for us to be able to buy the US All Spot for today, I would want to see price action take out this descending trend line, that is, break out of that descending trend line to the upside. And remember, we are not getting too excited as soon as the breakout happens, as we will need confirmations before we want to be joining any move. Now, to give a visual representation of what I'm talking about here, we want to see price break out of the descending trend line. First of all, breaking out of the $79.77 level as well, then a retest of structure, which will be the retest of both the ascending trend line and the descending trend line here, and of course the $79.70 level to give us an opportunity to join a bullish move to the upside. And if this happens, we join, then we also have more levels to capitalize on an uptrend continuation, such as the $80 mark, and of course we have the $80.40 level to maximize the potential of this bullish move. So let's see how the market will play out above this structure to guide our trading activity. So our center of focus is basically around the $79.70 level, where depending on how price action reacts to this trend level will determine where price action will be going for today. So you want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your trading activity for today. Now, if you have any questions regarding what I just explained here, feel free to let me know in the comment section, as I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument. Okay, I see some comments. 6288, good morning. Thank you for checking in. 980, all right. Fufarion, Nest57, 11564, 9390. All of you, you're wonderful. Thank you for checking in. And good morning to you, 8603. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the next instrument on our watch list. So the next financial instrument on our watch list is the USTech100, which has been quite an interesting trading setup we have here on the 1 hour time frame. Remember, we have been buying these assets since the beginning of this week, after identifying a range between the 15,450 and of course the 15,410. And remember that this consolidation phase lasted for about 48 hours, where we saw the expansion of that range to further emphasize how strong the indecision in this market was. And we attributed this development to the anticipation of the Fed's announcement and of course the GDP data which came in yesterday. So participants were actually testing waters to see how the market will react to this event. And of course, we saw quite an interesting setup during the first couple of days of this week, as we took advantage of the breakout of the 15,450. And since that moment, we have been buying the USTech100. And remember, we had levels such as the 15,480 and the 15,510, which welcomed more buy position in this particular market. Then we saw some couple of sell positions bringing price back into the zone, and which I told us all, I think on Wednesday and yesterday, that if price comes back into this area, buy pressure around that area will definitely incite buying opportunity. Remember how important that level is. It was initially our resistance line for the week, which was broken to signal our first buy position. Remember, our first buy position was above that level. Then we had a second buy position here on Wednesday, and we also saw another one happen during the New York session yesterday, and of course during the early hours of today. So it has been quite a bullish momentum on the USTech100. And for those who have a buy position running at this juncture of the market, you definitely want to be moving your stop losses to secure your positions. Right now, with this well-secured position at this point, what is going to be our next line of action for today? What is it that we are looking out for? Well, if you look at the 1 hour time frame here, it is quite obvious that buyers are dictating the pace in this particular market, though we have a situation that looks as if price action is trapped within a range that is between the 15,720 and the 15,004 ish, as you will see here. But one thing peculiar about this structure since the beginning of this week is that this is the area where price action started the week, and we have noticed that whenever price action comes back into the zone, we have been seen buy pressure resume around that area, giving us a clue into how strong that area is for buying power. Now, the same thing has happened in the last few hours now. Another buy pressure resuming around that area, and every point in time price climbs out of that structure, we saw new higher highs. Now, if you look at this impulsive move here, starting from here, we saw a new high. Can you see? Right around this area, and when it's dropped down again into this zone, we saw another new high, giving us a clue into how buyers are gradually gaining momentum. Now, price is back into that level, into that area now. Will this old bullish momentum we're noticing here turn out to incite a momentum that will break out of this previous high? Now, we are going to be taking this into consideration while we review this current market structure. Now, before I allow us to go into the details of how to position ourselves or manage this market structure, I want us to quickly have a review of the 4 hours time frame to have an holistic perspective of what is going on in the market, and let's see if we can have specific correlations between the information we can gather on the 4 hours time frame with that on the 1 hour time frame to make a well-informed trading decision for today. Now, in that regard, permits me to go into the 4 hours time frame, where I would love to share with you what our perspective was at the beginning of the week. Now, on the 4 hours time frame, this is what we were able to spot here. We noticed, of course, since the beginning of this year, price action has been very, very bullish. But what we did here was to take into consideration the nature of price action since the month of May. And in fact, we can see we have a bullish momentum in this market. And to emphasize that, we have a couple of trend lines to support that idea that the market is very, very bullish. Now, there is this, we had a couple of trend lines, but this trend line here is the one that has been supporting the bullish momentum we are currently in the last couple of months. Now, if we zoom into where that ascending trend line is at the beginning of this week, you will see something interesting here. Now, if you look at the structure closely, you will see that as soon as price got into that area around the ascending trend line, we've been seeing buy pressure at every point in time, sharing a beautiful confluence with that ascending trend line, giving us a clue that we might likely be in for another strong bullish momentum. And the only thing that will make us want to consider selling the USTech100 is for this zone here to be broken to the downside, taking out all the buy positions there, giving us some liquidity to further foster the bearish move to the downside. And if this does not happen, I don't think it is reasonable that we want to be selling above such a very robust demand zone. Now, for the fact that price remains above that ascending trend line and has continued to witness buy pressure every time price comes into that zone, I'm of the opinion that price action is likely going to be continuing to the upside. Now, with the situation we have, for those who still have a buy position, I told us all to secure that position while we are going to wait and see how the market is going to be reacting to this our key level at the 15,600. Now, remember how important this level is. We talked about this at the beginning of the week, where it sheds it has been a determinant of price action since the second half of this month. Now, you can see what has been going on here. This area was initially a selling niche before price broke out of that structure. It became another demand zone at this point, and at this point too as well, before the final breakdown happened here last week Thursday. And since last week Thursday going into the new week, we saw how that same level has been a very, very strong selling niche, and not until yesterday we witnessed the breakout of that area one more time. So I'm of the opinion that if price action goes on to break above the 15,600 one more time, there is a high chance that price action will continue to the upside. And look at this beautiful confluence here with this ascending trend line with that 15,600. Price action continue respecting that ascending trend line. So we're still looking, this current market outlook is still looking very, very bullish at this point in time. So I'm still looking forward to more buying opportunities above the 15,600 level. And if price action continues to climb to the upside, then a further breakout of the 15,720 will welcome more opportunities. And remember, we have the peak here at the 15,950, where a further breakout as well will further confirm the strength of the buyers at this point in the market. So these are my views here on the USTech 100. So let's see how the market will react to the 15,600 level to decide what our next line of action will be. And I told you here to consider selling at this juncture. I would need price to slice through this demand zone here, which has been a very strong platform for buying power since last week Thursday. So these are my views here on the USTech 100. If you have any questions whatsoever as regards to my explanations or illustrations, feel free to let me know in the comment section. So I will be given the next 10 to 15 seconds to see if there are any questions while you use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So we are very much good to move on to the next instrument. So hello, Valerie, I see your comments. Hello, Dino. All right. So moving on. So the next asset on our watch list for today is the GBPUSD. And in fact, on the GBPUSD, we were able to scoop in over 500 pips on this single bearish move after the GDP data came in on a strong positive note. Now, remember at the beginning of the week, we have been buying these financial assets as we saw, though we had some selling positions initially, if you remember vividly how, okay, let me share with you what really happened at the beginning of the week. Now, remember, we saw this range where price action was caught within the 1.287 and of course the 1.28 500 area. This was this range we had here, and the breakdown of that support line retest of structure gave us a couple of sell positions which moved about 30-40 pips thereabout in our favor before it came back into our entry point. And in fact, if you had moved your stop loss, of course, like we always do when price action moves significantly well in our favor, you must have been taken out in a modest size of profit or at a worst case scenario break even. Then we noticed for the first 24-36 hours of the week that as soon as price action got into the 1.282, we begin to see buy pressure resume around that area, giving us a clue that buyers, this might likely turn out to be an accumulation phase. Now, even since last week, this has been happening. We saw this at the beginning of the week, right into Tuesday's trading session. We saw all this happen, and at this point we said we are no longer selling, that the only condition that will make us want to sell the JPUSD is for price action to slice through that demand zone to incite a sell-off. And of course, that never happened. And because of the situation, we anticipated and positioned ourselves. So we were part of the bullish momentum all the way to the upside as we maximized that move, having more positions at the breakout of such levels as the 1.287, 1.29, and the 1.29720, and of course the 1.295 to capitalize on this move all the way to the upside. It was quite a very strong bullish momentum, which we of course enjoyed. Now, with the idea of buying that GBPUSD, we had an ascending trend line, which of course supported that idea for us and guided us all through to the highest points that bullish momentum took us to. And as a result of this ascending trend line, we said here that we are going to be using it to guide our trading activity. Now, in as much as we are looking out for more buying opportunity yesterday, had the breakout of the 1.295, which of course did not happen. We said a breakdown of the 1.295 will welcome selling opportunities. And I said here that for those who are already profitable on the GBPUSD, you can afford to test waters, leverage on the risk on the profit you had made so far this week to test waters around the 1.295 to check if the sell position there will click. And since that moment, you will see how price dropped significantly to the downside, giving us more opportunities to capitalize on this bearish move as price action broke down structures like the 1.29270, 1.290, 1.287, and of course the key level at the 1.284 to maximize the potential of that bearish move. So it was quite another phenomenal week for us on the GBPUSD, and for those who are part of this profitable journey, well done and kudos to you for being on standby to have caught these opportunities. Now, going on into the New York session today, of course, you shouldn't be in any position by now on the GBPUSD, as if you had moved your stop losses accordingly, you must have been taken out on all the sell positions you had. So while I was trying to dissect and see what the market could likely do today, I was able to come up with a simple setup that we can use to guide our trading activity for today. And coupled with the fact that there could be expectations of profit-taking activities as those who sold the pound sterling against the US dollar yesterday might want to start reaping some of their profit by start buying the GBP at a very cheap price and selling the US dollar to yield in some of the profit, especially with the new rates that we have on the dollar. Now, with the situation we have right here, this is what I was able to spot during the early hours of today. Now, one thing I noticed here is that as soon as price got into the 1.278 zone, we begin to see buy pressure resume around that area, leading into a situation where price is caught within a range between the 1.28 and the 1.27 level to give us an insight into the indecision at that point in time. And you all know how we do it in this community. When price action falls into this kind of range, we want to wait patiently for structures to mature before we want to be jumping into any position, where a breakout or breakdown of this range will welcome trading opportunities. And while doing this, I also considered that this range here could either transition into a trend continuation to the downside or a reversal pattern that could incite a retracement of the previous bearish impulse leg that we witnessed here yesterday. Now, if you look at the structure closely, let me zoom it out a little bit and see, you will notice that following this impulsive bearish move to the downside, the multiple rejection of these areas led into a situation where price action has finally broken out of that resistance line. In fact, it retested it, giving me a counter trend opportunity to take advantage of. And for those who took advantage of that buy position, well, that is phenomenal of you to have been on standby to catch that move. And if you had done that, you definitely want to be moving your stop losses to your entry point, securing this position, as this is likely going to be a retracement of that impulsive move that we witnessed here yesterday. Now, the question at this juncture is, how far will this retracement phase go before another wave of bearish momentum will happen to the downside? Now, this is what we are going to be looking at for today. So now that we have a buy position running, of the opinion that we have levels that we are going to be using to check if price will be reversing at any point in time. So we have levels like the 1.287, the 1.29, and the 1.297, and of course the 1.295 area, where depending on how price action reacts to this level will determine if we are going to be getting ready to sell or probably add more position if price breaks out and retest these levels. So let's mark these levels out on our chart, as they will be giving us an insight to know if that retracement phase has ended. So we might likely be seeing some things like this if price gets into that area: multiple rejections, double top structures, head and shoulder patterns, rising wedge, whatever reversal pattern you can think of that comes around that levels. Then you want to be part of a bearish move if price breaks down the neckline. But if price action continues to climb and break out, retest this level, then definitely we want to be adding more positions as we ride the move all the way to the upside. So let's keep this in mind. And for those who are taking advantage of these buy positions right here, kudos to you. Move your stop loss to your entry point. And for those who had missed out on this opportunity, it's okay. You have been quite profitable this week. There's no point hitting your head on the table, angry that you missed out on that opportunity. The market will still present to us more opportunities, of course. And since we already have a breakout, we could still have a scenario where price could come back, retest that structure to incite an uptrend continuation. So there is still hope. Let's see how the market will react. And in fact, we have this key level here at the 1.284, a very, very important level. Remember, at the beginning of the week, this is our key level for the week. And of course, you know how we use our key levels in this community. If price remains above the key level, we definitely want to be looking out for patterns and structures that will support the idea of buying. So let's see if the market will break out and retest the key level. Then we can welcome more buy positions at this juncture. So let's see how the market will play out. If you have any questions regarding what I just explained here, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move right into the last asset for today. All right, so in the absence of no questions, I want to assume that we're on the same page on that one. So we shall be moving right into the next financial asset on our watch list, my favorite, the XAUUSD. In fact, the XAUUSD has been another interesting trading setup for us this week, as we've scooped in significant amount of profit on this commodity. Now, before we kickstart the expectations for today, let's run through how things went by for us since Tuesday's trading session. I don't want to go to the first day of the week because that is on another chart entirely. And in fact, I want us to use this one, as this is what we have been using to guide our trading activities for the last 2 to 3 days Now remember, on Tuesday we had a buy position when price action broke out of the 1,963, and since that moment we have been adding more buy position to our positions. And for the fact that price remained above our key level, remember our key level for the week on the XAUUSD is the 1,960 area, which of course, when price remains above our key level, we want to be looking out for patterns and structures that will support the idea of buying that asset. Now, for the fact that price remained above our key level, coupled with these old structures we identified around the 1,963, we captured that bullish move and we went on to add more positions, had the breakout of levels such as the 1,968. We had the 1,970. I think here. Then we also added more at the 1,973 and of course the 1,975. So that is how we rode that bullish momentum to the upside. And in fact, in addition to those levels, we also had an ascending trend line, which we agreed that we are going to be using to guide our trading activity for the later part of the week. And of course, you know that as long as price remains above that key level, we want to be looking out for buying opportunity. Now, during our live session yesterday, we were around here. This was where we were exactly. And I told us all here that all buy positions must be secured, as our center of focus for yesterday's trading session remains between the 1,980 and the 1,975. And I also emphasize the peculiarity of this 1,975 area, which I told you all yesterday shares a beautiful confluence with that ascending trend line. So I said here yesterday that coupled with the continued selling pressure, we noticed around the 1,980 that there is a likelihood that sellers could come in when price action breaks down both the ascending trend line and of course the 1,975. Then I said that for those who are already profitable on the XAUUSD, you can afford to have your sell stop order below the 1,975 to test waters around that area, risking some of the profit we had made so far this week to leverage on that position. And look at what happened here. I told us all to maximize the profit by having more sell stop orders, had both the 1,973 below the 1,971.50. In fact, that was the three positions I was able to capture yesterday. And in fact, we had more other levels like the 1,970, 1,968 and the 1,965, which unfortunately I was unable to include into my orders as price action dropped significantly to the downside. So it has been quite an interesting 24 hours for everyone in this community, and for those who took advantage of that move, well done and kudos to you for being on standby to catch that move. Now, with that being said right here, no one to be in a sell position right now, of course, because if you had moved your stop losses, you definitely must have been taken out at this current market structure. Now, before we go into the details here, I would like us to scale up into the higher time frame. Let's have an holistic view of what is really going on in the market, and let's see how we can, if we can find correlations between the higher time frame and the 1 hour time frame that could give us an idea or insight into how to position ourselves ahead of the New York session today. Now, going into the 4 hours time frame, I want to refresh our memories as regards to what we saw at the beginning of the week on this chart. Now, if you remember vividly, at the beginning of the week, this is what we were able to come up with. We saw this, we took into consideration the nature of price action since the beginning of this month we are in, that is the month of July. And we were able to come up with the fact that price action has been very, very bullish throughout this month. And to further emphasize that bullish momentum, we had a couple of trend lines, which we of course used to guide our trading activity at the beginning of the week. And one of the things we saw on this chart was that as soon as price action got into both of these ascending trend lines at the beginning of the week, we begin to see buy pressure around that area. And coupled with the fact that we had our key level at the 1960, which of course we used to guide our buying opportunity, we joined that bullish momentum to the upside. As you will see, price cut into the 1980 zone and we saw this bearish move to the downside. Now if you look at the structure now, considering this impulsive bearish move that sliced through both of those ascending trend line, from a technical standpoint, whenever price action breaks out of a very key important structure such as the ascending trend line on this chart, we expect that some point in time price might likely come back to retest any of the trend lines to incite another bearish momentum to the downside. Now we want to consider this this emergence of buy pressure as soon as price action got into the 1940. This might likely be a retracement move that has just started, which of course price gets into the ascending trend line might likely incite a sell-off. Now the question here is, do we want to be part of the counter trend opportunity? Well, if you are not a scalper or someone who feels comfortable taking counter trend opportunities, you might stay clear of this, but it is quite simple to take advantage of an opportunity here. All you just need to do is when price action moves well in your favor, you want to be moving your stop loss to secure your position. As with the situation we have here, sellers could still come in anytime. So in order to be able to capitalize on a trading opportunity today, have been able to identify a simple setup using trend lines and levels to identify how to manage our position for today. So going back into the 1 hour time frame, this is what I was able to come up with this morning. Now the first thing I observed here is that as soon as price action got into the 1944 level, we begin to see buy pressure resumed, and this buy pressure continued in such a way that it continued to find higher lows. And when we start noticing higher lows on the chart, it's a clear sign that buyers are gradually gaining momentum behind the scenes. So with the situation observed here, I had a couple of trend lines which of course we are going to be using to guide our trading activity for today. So you want to be marking out these trend lines on your chart. Very, very important, as depending on how price action reacts to this trend line will determine if price will be continuing to the upside or is going to be nosediving to the downside. Now, in addition to the 1944 is this 1950, which showed us that during the later part of the New York session stroke the early hours of today, price action was initially confined within that zone before we saw the breakout of the structure during the early hours of today. Now, with the breakout of that structure, for me, this could be a sign that we are likely going to be seeing an uptrend situation here for today, as price has come back to retest the 1950, followed by continued buy pressure just right above that ascending trend line. So if you had bought at the 1950 area, well done to you for capturing that move. So you definitely want to be moving your stop loss to your entry point, secure those positions so that if price action goes against us, we are going to be taking out at the worst case scenario break even on this one. Now, with the situation we have here, if you had missed out on that one, well, we have more opportunities at the breakout retest of the 1955 level, which happens to be the highest point price action had been in the last 10 hours or so now. So to join this bullish momentum here, I want to see price action continue to climb, find higher highs such as this, and then a further breakout of the 1960 will welcome more buy positions in this market. So let's see how we can capitalize on this bullish move as price action continues to find higher lows and higher highs in this market. So this is looking very bullish in the sense that this is a retracement phase. And I told you earlier that we don't know how far this retracement phase is going to go. So we shall be using levels such as the 1960, 1965, 1970 as a yardstick to know if there is going to be the end of the retracement phase or not, where we shall be looking out for patterns around that area to determine what our next line of action will be. Now, in as much as we're looking out for buying potentials in this market, as we are looking forward to more breakouts of the 1955, we cannot ignore the potentials the sellers also have in this market. And if we consider the strong bearish impulsive move that started yesterday, slicing through both the ascending trend lines we identified on the 4 hours time frame, of course, we should not ignore the potentials the sellers could still have at this juncture. Now, with that idea in mind, I'm of the opinion that if we are going to be selling, then I want to see price action slice through this ascending trend line to give me a sign that this trend line may no longer have the capacity to continue to reject the sellers. And if a breakdown happens, then we want to be getting ready to be part of a bearish move. So to give a visual representation of what I'm talking about here, a breakdown such as this, breakdown of the trend line, which of course also shares a confluence with the 1950 level, a strong psychological area there considering the round figure of that price, might likely incite a bearish move. Now, once we see the breakdown happens, remember we are not getting too excited. We want to scale down into our lower time frames such as the 5, 10 or 15 minutes time frame to look out for confirmations that buyers are finding it difficult to climb back above the ascending trend line. And this of course will reflect on the chart as a retest of either the trend line or the 1950 to incite a bearish move to the downside. And if price action continues, then a further breakdown of the 1944 level should be welcoming more opportunities to maximize the potential of that bearish move. But with the way things are looking right now, I'm of the opinion that price action is going to be going to the upside. Hence, I'm anticipating a further breakout of the 1955. But if the opposite happens and continued selling pressure persists around the 1955, leading to the breakdown of the 1950, then we will not have any other choice than to start considering selling. So these are my views here on the XAUUSD today. Very simple setup we have on the 1 hour time frame. Our center of focus is basically between that 1955 area and of course the 1950, where depending on how price action reacts to the structure will be determining how we are going to be managing our positions on this asset. Now remember that we have a high impact event coming up later today. I think in about 30 minutes or so from now we should be having that event. That is okay, I think about an hour or so we are going to be having that event now. So we are likely seeing the reflection of the anticipation of the event on the chart right now as price action is still finding its way through this current market structure. So let's see what happens. Mark out these levels on your chart and let's wait for our structures and signals to mature before we want to be jumping into any position at this point in time. So these are my views here. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds before I draw the curtain for today. So if you have questions, let me know in the comment section, and you can as well take that time to mark out these levels on your chart. All right. So since we have no questions, I will just take this as a confirmation that all my explanations are well understood and that everyone are on the same page with me here. And so let's just take this as a positive signal that we are very much ready to be part of the trading, to take advantage of trading opportunities during the New York session today. So we were able to take on 4 financial assets for this week, and in fact we did significantly well across all assets for this week. We had the US All Spot, we had the XAUUSD, the GBPUSD, and of course the USTech100, popularly known as the NASDAQ. So it was quite an interesting week for everyone in this community, and we look forward to more opportunities today during the New York session as we hope to capitalize on more to maximize our potentials, to maximize our profits for today. So I see your comment, Fufarion. Well done to you. Glad you stayed true to the end of the session, and thank you for your compliments. So with that being said here, I would like to call it a day here. It has been a wonderful moment with you guys. It has been a wonderful week. And for those who are joining us for the first time, I hope you are able to gain 1 or 2 things from what we discussed here today. And trust me, the more time you spend with us, the better you become in being able to digest the information you have gathered here, which you will eventually use to independently make your trading decision on your own account. So once again, you are welcome, and I still look forward to seeing more of you in the live session. So on this note, I wish you all best of luck during the New York session today, and of course wish you a wonderful and beautiful weekend. Do have a wonderful evening and weekend, everyone. Bye-bye.